Scott, I want to get to you. What happened here?
Well, I think it's obviously a pretty big disappointment. You have to take everything here with a grain of salt, however. There's a lot of seasonal adjustment issues, particularly with the retail. I think if you look at the unadjusted numbers, you'll see the retail employment up. It's just that it didn't rise as much as the seasonal adjustment was looking for. So that shows up as a seasonally adjusted decline.
Right, but the trend, though, Scott, the trend that we have been seeing with jobless claims, we're looking at the 4-week average, I think it was yesterday, was that we were, in fact, finally declining closer to that 400,000 level. How did we get spooked and get it so wrong on this front?
Well, I think the market's expectations probably got a little bit ahead of themselves. If you look at the weekly jobless claims, a little bit above 400,000, it's good relative to where we were a couple months ago, but it's pretty bad on historical levels. We want to see jobless claims on a week-to-week basis falling, well below 350,000 to be consistent with a strong labor market. So, yeah, we are seeing improvement in jobs. I mean, this isn't a jobless recovery, but the job gains we've seen this year really haven't been enough. We need to see payroll gains on the order of 250 to 300,000 per month to really push that unemployment rate down.
Right? And doesn't that
not happening?
And doesn't that seem like a further off goal now that we have this number?
It is, but I think, in hindsight, when you look at this recession and recovery, nobody expected this to be really a V-shaped recovery. This is a financial crisis. It's going to really take a long time before conditions are back to normal. And normally we look to small firms to account for a lot of the job growth in an expansion, these small, newer firms. And you're still seeing tight credit for a lot of these small firms. So, again, it's going to be some time before the job market really gets going on a full basis.
Mike?
When you look at the numbers, Scott may be right about seasonal adjustment because we saw a very small decline in general merchandise stores, about 15,000 jobs at a time when they should be hiring. So the seasonal adjustment factors may have anticipated a greater hiring than we actually got and pushed the numbers down more than expected. And also, we are seeing some declines in manufacturing, and we did see that reflected a little bit in some of the indexes that came out around the country, the manufacturing indexes. It's still not terrible, but we're not adding workers there. And then generally when you go through, what you're seeing in the service industries is just a few thousand jobs created here and there. We're starting to add jobs, but we're not adding a lot of them. It looks like companies are still pretty cautious.
Sarah?
Gold. I'm watching gold. Gold hitting $1,400 an ounce. You see that rush to safety, that disappointment in the market. 9.8% unemployment rate. You heard a big booing across the trading desk behind me. That was below expectation. Significantly, nobody expected the jobless rate to tick up from 9.6% to 9.8%. So check out that reaction in gold, rushing to buy the safe haven metal, if you will. Also, the dollar yen, sharp reaction. Dollar plunging against the Japanese yen, falling as much as a full percentage point. And dollar yen is really a good one to look at when you're talking about economic data. You see the reflection, poor data for the U.S. economy, and that really sent the dollar yen sharply lower.
It's going to be interesting to see, Betty, how people react to this number because confidence has been so important. Americans went back to the malls in November. A lot of people came into the labor force, which pushed unemployment up because they thought they could get jobs. If they're finding they can't, are they going to pull back? That's the question that Wall Street's going to ask.
Right. Well, Scott, what do you say to that?
Well, again, I think this is going to be a long process. This is going to be a pretty slow-going recovery still, but we are moving in the right direction, and hopefully we can build up some steam. We still face a number of headwinds in the first part of next year. You still have these lingering problems with residential real estate. You have state budgets that are under pressure.
Right.
You'll have the federal fiscal stimulus, which is going to be winding down. We still have a lot of uncertainty going on in the near term with what's going to happen with the Bush tax cuts.